Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, the Federal Reserve expected to keep interest rates steady, but to tee up September rate cut, as well as that the EU prepares two-step trade plan to tackle Donald Trump. We've got lots to talk about on the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is to do with the Federal Reserve. Now, the Fed is now expected to set the stage for cutting interest rates this week as inflation in the US begins to make a turn to the downside. This comes as the Fed's interest rate decision approaches this week, in which the FOMC is expected to keep rates at their all-time high whilst laying the groundwork for future cuts. Now, of course, this topic has been of great importance, and I mean that's always the case for us because the Fed does have such an influence over the US economy, obviously, with the Fed, controlling US's monetary policy. And as a result, it has a great effect on markets. The economy, is directly integrated with the markets, and the markets track the economy and that kind of thing. So ultimately, the Fed is always a very important topic, and when we do have these interest rate decisions roll around, as they do come every month basically, and they're following press conferences, and whenever Jerome Powell's speaking as well, we're obviously covering that. And of course, this week is one of those weeks in which we are going to hear from the Fed once again. We're going to see an interest rate decision. Now, as I said in the kind of introduction there, we aren't expecting an interest rate cut this week. That said, as we've been forecasting now for the past few months, we are still expecting that rate cut in September. And what we're expecting to now hear from Powell this week is that rate cut will come in September. We're kind of looking for a confirmation here, and that does mean that kind of does have a very important effect on markets, of course, as it basically means that markets have likely started to price in that reality, and ultimately understanding expectations is the best way that we can then start to understand the market, because the price is where it's at, because that's where people are pricing in the current data, but also the future expected data, what people are expecting to come out from whatever economic bureau or whatever, and that's why this topic is, of course, not only important, but why we need to kind of maybe even critique what we're hearing here, because ultimately, should Powell come out and start to talk about inflation or the economy in a way which doesn't actually create a more dovish picture, then we will more likely see a massive kind of fallout to whatever side that kind of specific US asset would move, depending on a dovish position from Powell or a hawkish position. So what I'm saying is there is kind of more of a potential move should Powell come out and be more hawkish than should he come out and be more dovish, as we are kind of expecting some very dovish rhetoric from Powell this week. So that's something to definitely keep on your mind. Now, of course, we're kind of going into this, as I said, expecting some more dovish rhetoric, and why that is, well, ultimately, as we've covered over the past month or so, inflation, whilst it had been very kind of stubborn over the past year, has now finally started to take a turn for the the downside. That's seemingly what is taking place. The latest data has shown that. That said, whilst that has been the more recent data previous to that has shown that inflation has remained very stubborn. So possibly Powell will come out and say, whilst we have seen some very good, some data which presents a very nice picture for the US economy recently, showing that inflation's coming to the downside, at the same time, can we really say that now's the time to start cutting interest rates, when previous to this data we've been receiving a great deal of data showing that inflation is very stubborn and it doesn't look like things are going to take a turn to the downside in the long term. We just don't have enough data yet, and that's really what we've been hearing from Powell for quite some time now, is that basically there just isn't enough data to say that interest rate cuts can be made. As if we remember that, if we go back to the start of this year, I think many of you will be able to remember when we were talking about the potential of 6 to 7 interest rate cuts this year, and how wrong those investors were, how wrong the markets were when predicting that, and ultimately the stubborn inflation which followed the start of the year really then led traders to decide that basically now only 1 or 2 interest rate cuts are likely to take place this year. So that's how quick things can change, or how wrong expectations can be. And that's why, of course, as I said, we have to approach these kind of situations with a more critical lens. But we'll definitely stay updated, keep you updated on this topic. No data is coming out tomorrow. Actually, some important data is coming out tomorrow, but the interest rate decision is not today. But we will keep you updated on this topic, obviously, but stay up to date as much as you can throughout the day as well, with more and more evidence highlighting that the US economic conditions are improving enough to enable rate cuts. Not only is inflation on the downturn, but also the labour market has begun to soften, with hiring having slowed from its fast pace seen months ago, and thus wage growth has reduced. The effect of high interest rates on the US economy is also starting to become apparent, with layoffs being on the rise and therefore pushing the 3-year average unemployment rate up 0.43%. This figure marks the lowest in the past 12 months, and it's also not far from the 0.5 percentage point trigger for the SARM rule, which marks the beginning of a recession. If FOMC officials want to maintain a healthy labour market, they know that the Fed's benchmark rate must come down, as keeping it high for too long worsens that metric. Economists now expect the Fed to acknowledge the progress that has been made regarding inflation in this upcoming rate decision, and also believe the statement following the decision will make it clear that inflation is not the only risk to the US economy. So as I said, we'll keep updated on this topic as things will emerge, but very important one to stay kind of covered there, and very interesting kind of expectations obviously going into this interest rate decision. That's all to talk about in this article, though. Next article we'll talk about goes to the EU, but still on the topic of the US, as well as now we're kind of more on the political side of things, as we were yesterday, talking about the prospect of Donald Trump and what that might mean for trade and that kind of thing, especially EU and US trade. Now, the European Commission has now begun the process of developing a new two-step trade deal to deal with the potential election of Donald Trump this November. This agreement looks to offer the Republican nominee a quick deal should he win a second term as president of the United States. Now, of course, we've been covering the election race, as we always say, and we've been covering the recent fallout of Biden, the recent Biden dropout from, the race for presidency, and now, of course, Kamala Harris has taken the reins. But that said, Trump still remains the leader in the polls, especially in those key battleground states, those swing states which really decide elections. And that's why, of course, we're now starting to see different leaders around the world start to come up with their own plans and, their own kind of ideas of how they would then deal with, the potential reality of Trump becoming president once again in the United States. As of course, the first time he became president, it was kind of a massive shock to most leaders, as he wasn't predicted to win the election, and his kind of anti-establishment views really shocked a great deal of figures around the world that were used to the kind of strong US presence within economies around the world and their kind of interventionist policies, which Trump vehemently did kind of oppose and pushed for a more isolationist measures, and ultimately this is what the European Commission is now looking out to kind of deal with, as Donald Trump implementing any of these kind of isolationist measures will have a massive effect on the EU's economy, or the Eurozone's economy more like, and also other economies around the world which trade frequently with the US. But here we have, of course, the European Commission trying to deal with that now in a way to kind of get ahead of the potential issues which may form. It will, of course, be very interesting to see whether Donald Trump will kind of respond to this before he even becomes president, or before even the election takes place. And I'm sure markets will, as always, ways will already start to, kind of price in or look at the ways in which this trade plan could affect markets. And that's really why we're covering this topic, is should the EU kind of massively decrease its trade with the US as a result of the new tariffs which Trump will likely bring in, then that will have a massive effect on specific EU companies, and even the indices of Europe as well, and at the same time it'll also affect US markets, obviously, but at the same time, should Donald Trump come out and say he kind of agrees to these kind of terms that are being laid out, then of course we could see the exact opposite effect in the markets. So that's why this topic is of course so important to cover, and any of these political topics, whilst they're less centered, or they're less related to directly stocks and crypto or forex or whatever, ultimately it's very important to understand as these are the wider contexts which affect markets and the kind of macroeconomic perspective, with the agreement also factoring in targeted relation with the agreement also factoring in targeted retaliation should Trump instead opt to implement damaging trade tariffs. This forward-thinking approach is their way of responding to Trump's pledge to impose a 10% minimum tariff, with the EU expecting to reduce EU exports by nearly 150 billion euros annually. The EU are expecting to approach the Trump team using negotiators before he even takes office, should he win the presidential election in November. In such negotiations, they would discuss the US goods that the EU would buy in large quantities and thus prevent the 2017 to 2021 trade disaster between the US and EU. So of course we'll keep you updated on this topic, but stay updated yourselves as well. That's all to talk about in the articles though. Next to talk about, like always, is the charts, where some interesting things are playing out for sure if they can load up. And like always, we're starting on the Dow Jones. We're talking about US indices as a whole, where of course we're now experiencing a retracement on the retracement. So going back to the 9th of June, which is now some time ago, we saw this rally take place with the price breaking out of this range that formed this kind of period of stagnation. We saw price break out of those levels and move to the upside, in which price broke above all-time highs and moved into uncharted territory, where price kind of finally topped off around the 41,379 level, and then that of course from that level we saw a retracement. We saw a sell-off with price then moving to the downside and then bottoming out once again around the 39,815 level, and we kind of once we started to see a swing back again to the upside last week, we did say that it was now likely that we were going to see this continuation to the upside. So that's the kind of general pattern that we see with retracements, and price had just reacted to that kind of Fibonacci retracement level of 6180. So it did seem likely that price was now on the upswing. We haven't seen that play out though, and ultimately over the course of Monday, instead what we've seen is price sell off to start off the week, with price now moving to the downside from around the the 40,800 level, and now we're even approaching those old levels that we kind of broke through ending off last week. So what will be interesting to see is whether this is just a very small retracement on the current retracement, and as a result we're going to continue this the macro trend, which is a continued swing to the upside, and this is more so just a move on the lower time frame. So possibly kind of a zoom in on the US 30, go on those lower time frames as we to better understand what possibly is going on for the Dow Jones at the moment, but very interesting price action nonetheless. Next to talk about though is the dollar, which is now broken out of this range that has formed this period of consolidation, sideways price movement, and we definitely have the possibility of price shooting further to the upside and reaching those higher areas of liquidity, it seems like. Ultimately though, what we've seen over the course of Monday is a massive stagnation, a stall out for the dollar, where prices, whilst has broken out of this range, has stalled out on top of that key support level, once resistance level, but now seemingly acting as a support level. So definitely keep your eyes on the dollar we will definitely keep you updated. And obviously with the the countless figures that are coming out from the US this week, the amount of important economic data and economic news points, we will keep you updated on that. And that could of course explain the lack of movement that we've seen over the course of yesterday for the dollar. So definitely keep your eyes on the dollar as important news is coming out, so you have to stay up to date with that, and that'll be making some interesting trade opportunities hopefully. Next to talk about is Euro USD, which obviously sold off to the downside over the course of Monday. So that's really the price action that we saw play out over the course of yesterday. With price, you could say price reacted to that 38.20, but really, it didn't actually tap those levels. Instead, it kind of just came very, very close. And from that level, we have seen now a sell-off to the downside, with price breaking below the kind of bottom of the market that was formed on the 24th of July. And now we definitely have the possibility of price shooting further to the downside, as it is now below that kind of bottom of the market. The question will be whether price will reach this kind of minus 27.2% Fibonacci extension level, or in fact, are we going to see a kind of false breakout form where price then returns back above the bottom of the market and remains within this range that somewhat was forming. That's all to talk about on Euro USD. Next to talk about is pound yen, where some interesting things are playing out, with price kind of stagnating to start off the week. So price is remaining within this kind of range that has formed, this kind of period of consolidation. Despite this being a period of consolidation, if you zoom in and kind of compare it to previous price action, there is actually a great deal of volatility within the market at the moment. It's just following the absolute insanity that we saw play out for pound yen over the past week or two. Ultimately, it looks, it's kind of dwarfed, and therefore it's kind of hard to see how significant the moves are that are currently taking place for pound yen. And it's one of those situations, once again, where because we've seen such dramatic moves in the market, we're really going to have to wait and see what's to come for pound yen, and where price will now go, kind of what levels will be created within this new market that's seemingly formed before any kind of decisions can be made. That's all about on pound yen. Next to talk about though is Bitcoin, which is sold off to start off the week. So we were kind of painting a more optimistic light yesterday, but ultimately what we've seen over the course of Monday is price swinging to the upside before swinging to the downside. So over the course of Monday, we saw this movement where price broke above this key area of liquidity and resistance that price has struggled to remain above, or it could break above. And ultimately, whilst price had broken above that level, it failed to tap that minus 27.2% Fibonacci extension level. Arguably, it did tap it, but not a full, kind of retracement and Fibonacci extension had been reached. And from that level, we have now seen a sell-off to the downside over the course of Monday. The question now is whether this is just another retracement that's taking place, another move in the market, and whether we now will see this continued pressure to the upside that we've seen form for Bitcoin since the kind of massive swing to the downside that bottomed out around the 5th of July. So price is currently on that 61.80. We're now waiting to see whether price will swing again to the upside. Next out is gold, which remains actually has kind of played out quite interestingly over the course of Monday. When we started off the week, price was sitting at this key liquidity zone, this key resistance level, at the very important psychological level of 2,400. Now that kind of painted a very kind of bearish image for us, because ultimately it also lined up with that 61.80, which we know is a very important Fibonacci retracement level, and seemingly we have now sold off from that level. That said, we haven't seen an overwhelming amount of volatility, an overwhelming amount of kind of bearish strength, and really we've now kind of stalled out after a small move to the downside, about which made up around half of the kind of current retracement that's taken place. So definitely keep your eyes on gold, and look at where price is sitting with regards to these key psychological levels, as very interesting things are playing out for gold at the moment. Next to talk about though is oil, which has continued its moves lower. This kind of continued bearish momentum pressure that's formed since the 5th of July, and price is continuing that swing to the downside, with price now breaking below that key liquidity zone, that key bottom of the market, which was at the kind of $80.5 a barrel, and price is now broken below that bottom of the market, and now we're breaching levels not seen since the 10th of June. We could definitely now see oil make its way back down to those levels that formed the very, very bottom of the market around the 4th of June. So definitely keep your eyes on oil. Very interesting price action indeed. That's all to talk about on the charts though. Lastly to talk about is the economic calendar, where an overwhelming amount of very important data is coming out today, so we'll make sure to cover all of that. First, you're receiving the Japanese unemployment rate figure, followed by the Spanish inflation rate figure and GDP growth rate figure, followed by that receiving the German GDP growth rate figure and the Italian GDP growth rate figure, and then following that receiving the Eurozone's GDP growth rate figure and the consumer confidence figure of the Eurozone. Following off on that, we're seeing the German inflation rate figure and the Spanish business confidence figure, as well as the Chinese FDI figure. And then to end off the day, we're seeing the US consumer confidence figure. So lots of very important data coming out today, but most importantly, lots of very important Eurozone data. So make sure you keep your eyes on all of that. We've covered lots in the articles though, lots in the charts, and lots in the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.